It's been an absolute red-hot market for technology listings. Has already surpassed the heady days of the dot-com boom. Fundraising from tech-related IPOs in the city has hit a record $4.2 billion this year. So will the fever continue? Joining us is Brian Gu. Brian is JPMorgan Investment Banking's Asia-Pacific chairman. It's different this time, Brian, isn't it? That's what they always say when it happens. Why is it different this time?
Well, I think it's the performance is actually a result of a number of factors coming together this year. One, I think you see a global resurgence of money liquidity, especially liquidity piling into emerging market, which is always good for new deals. Secondly, I think you see a strong performance of existing listed companies like Alibaba, like Tencent, these companies from the new economy in China. It's doing really well, posting strong results. That's also captivating investors' attention. And then thirdly, I think you're starting to get companies that's representing the new phase of growth in China. So all that, coupled with, I think, stronger stock connect impact by the Hong Kong Stock Exchange agreements with mainland China, all those factors that's contributed to the recent surgence of deal activities. I'm
not talking about this company particularly. I'm just singling it out as an example of these IPOs. Vortex Global came to the market yesterday. Now, share price up 110% since then. This is not a dot-com, it's a lighting equipment maker. So it's not restricted to just tech, is it? Well, I mean, again, I have never heard. I'm not talking to you about this company in particular. I'm just saying, generally speaking, it seems to be anything that is coming on is being snapped up. Well, I think there is certain sense of enthusiasm in the market. I think that contributes to the post-IPO performance in a lot of stocks. Some of the micro-cap probably got impacted more because they're more retail-driven. The sentiment will impact them. But even the larger deals, we see the deals like Zhong'an Insurance, China Literature, those are billion-plus IPOs, also posting strong performances. Does all this in any way for you smack of a bubble? I would not call it bubble because I think the bubble usually is supported without underlying fundamentals. What we see today, the companies that's doing well actually are posting very strong profit, and the profit growth is almost in sync with their stock price rise. So if that's the trend, then I don't think there's the real bubble. But obviously, how much of this growth is sustainable, I think that's something investors are watching closely. To what extent has Stock Connect contributed to this? I think Stock Connect contribute both from the supply and the demand front. First, I think it provides liquidity from both China to Hong Kong and vice versa. At the same time, I think it makes Hong Kong market accessible to the users and the customers of the companies listed here. So a lot of companies actually want to list in Hong Kong because they feel like the offering can touch their customers back in China. Is it also because liquidity is hit in large part, and we've got a lot of mainland brokerages and mainland investment houses moving in to Hong Kong and replacing some of those Western banks which have retrenched to some extent? Absolutely. I think the domestic liquidity from China is supporting the market. But don't forget, I think at the same time you have inflow from other developed markets money into emerging market at the same time into Hong Kong. So both the fact contribute to the rise. Let's just also talk about and return to the IPO market. What are you seeing in the pipeline at the moment? I think the pipeline continues to be very robust. I would expect next year to be another very strong year for IPOs. Most of the IPO pipeline will consist of new economy stock, from technology, from healthcare, from new environmental. And I think those are going to be the areas that will people find strong players. Another factor will be continued SOE reform that will yield large cap IPOs as well. Well, absolutely. So what you see is in that reform process of the state-owned enterprises, arguably a breakup of some of them into lesser parts and IPOing up various parts of it? Or what's your view? That's one of the themes. I think spin off some assets, but also merging, consolidation, and re-IPO of certain assets as well. Any particular industry groups you'd be looking out for? Well, I think for the IPO next year, I think technology continue to be this, I would say, the largest. I was talking about the state-owned enterprises, actually. I think state-owned enterprise, you'll look at probably telecom, you'll look at energy, you'll look at financial services. Those are the areas that will probably see more deals. And the irony is, about a year ago, there was a lot of talk about many of these state-owned enterprises becoming national champions by merging into even bigger mega players. Is that talk gone?
No, I think it's continuing.
So then how does that sit with the spin-off story?
Well, I think the spin-off story is related to assets that will be better listed, awarded with better valuation on its own. But I think continue to form Chinese champions, I think, is going to be the policy for the new administration as well.
Brian, we've really been going tech-heavy. Let's move to the wider market. You also look at healthcare, you look at some of these biotechnology companies. Healthcare has been seen as a crowded trade because of the potential it has looking ahead. But others say, well, the potential's so huge, why do you say it's crowded?
Well, I think healthcare definitely has the potential. I mean, from a percent of GDP perspective, as well as look at, how far the gap is between China and the US in terms of healthcare companies. The market cap gap anywhere ranges from 15 times to 20 times if you look at the largest companies between both markets. Whereas in technology, you can see the gap is less than 1 time. So there's a lot of catching up to do, which represents a bigger opportunity. I think the challenge for Chinese company right now is to establish a critical mass of investor base that can really understand the technology and science and really be patiently investing and to, waiting for that to happen. I think that started to change. We see some recent deals this year. We did an IPO called Zai Labs in the US, which performed extremely well. It's a company that does biotech, but also use a new business model of bringing new products and innovation into China to de-risk the R&D side of the business. So I think we'll see more of those business models going forward.
Other trends?
Well, I think other trends in healthcare, I think you will start to see more M&A as well, because one area that China has done well is to utilize its capital to acquire good technology and business models abroad. We've seen Chinese companies and private equity firms bought service firms, clinic centers, as well as, I think, drug companies as well. So I think that trend will continue future opportunities.
You mentioned valuations. How has capital curbs, capital outflow curbs affected that side of it?
Well, I think the foreign exchange control early this year does put a damp into the overseas M&A activities. So I think if you look at the overall M&A volume has come down almost by 50% this year. However, I think after the Party Congress, we do see a sentiment pick up by our clients of willingness to look at deals and potentially do larger deals. So next year could be an interesting, active year to watch. That's
going to be something. As you get more and more inquiries, we won't be hearing about them now. Of course, you're just getting the inquiries right now, so the deals come up to the table. We'll be hearing about them in January, February, maybe even later than that, correct?
I think so. I think next year you'll probably hear more than this year.
Is that the big thing, the big theme for 2018? What is your big idea for 2018?
Well, I think in 2018, the M&A pickup will be quite, I would say, I'll predict a large pickup in larger deals. So that will be something to watch. If the market continues as is, I think some of the larger IPOs will come to market as well. So continued robustness of IPO activities. And I think overall, I think the sentiment of deals and business will be stronger next year.
What about the financial industry? We have this reform on the table. We haven't had the full draft yet. It's being written and opening up the Chinese banking system. What's your view on that? And do you foresee many foreign banks actually taking control of the JVs that they have, or actually going it alone and setting up?
I think the reform is a very welcoming message to us, to the international banks and financial institution community. I think it does show the government's commitment to further open up its market. Same time, I think it offers a lot more opportunities for us. I'm sure many of the financial institutions will take advantage of this new regulation. You will start to see joint ventures or new ventures with 51% controls by international players.
Brian, we've only got about 20 seconds left. Very quickly, what is the question asked most by your clients? Very, very quickly.
I think the client asked how long this market will last. That's the same question you asked. And I think so far we see no change in sight.
So let's leave it where we started as well. Thank you, Brian Good.
Thank you.
From JPMorgan Investment Banking. He is their chairman for the Asia Pacific there.